Yo, what's going on, guys? Royal FX here, and today I'm coming at you guys with something a little bit different. So this isn't going to be an analysis video, and if you saw the title, then you're obviously going to be kind of aware as to what this video is about. But today I'm going to be showing you why you're backtesting wrong. And you might be thinking, well, what do you mean backtesting wrong? Isn't that just going back in time, doing my trades, whatever, blah, blah, blah. I'm not necessarily saying you're doing it wrong, but I'm going to give you some tips, some tricks to show you how you can do it better, because backtesting well will lead to better trading in your actual sessions. So here's my first tip. So start at a super high time frame. So like monthly, weekly, I really would start like super high. And what you want to do is you just want to flatten this out. And to flatten it out will allow you to like not be able to just like kind of anticipate the moves that you're like expecting to see, because you had seen them before you hit like your replay bar. So now that we're flattened out, right, and I'm on GU here, so flattened out, here's another tip. When you're replaying, sometimes, I know it's happened to me a bunch, but you'll replay too far back. And what I mean by that is you'll replay so far back that when you start like trying to go to lower time frames, like the information isn't available to trade. So the rule of thumb for that, or at least the rule of thumb that I like to use, is for every minute you want is a month back. For example, here, I'll even zoom in just to show you guys. So say I want to break my trades all the way down to the 1 minute marker. It's pretty simple. What I'll do is, it's kind of tough from doing it here. I'll do it from, let's say, the daily, because that's a little bit smaller. So we'll go here, right? And then it's currently, as of right now, it's the 4th of October. So we'll go back all the way to September 4th, right? Or this is September 5th, but it's the same. But then you'll have this 1 minute information. Well, I'll show you. If I get rid of it, we go back to daily, replay. Let's go back to, let's see, that was September 4th. Let's go back to July 29th. So this is a little over 2 months away from the 1 minute mark. Look at this data point. You don't have the historical data. I think even if I just went another month back, like if I did like exactly 2 months, it still wouldn't get, I think you can get like a little bit extra than a month, like maybe like, I don't know, 35 days or something. But I say general rule of thumb, just go like a month back for every minute you want to like dive down. Just if you want to go down to the 1 minute, only go back a month. If you want to, if like you break your trades down to like the 15-minute mark, then you've got like a whole year plus some to work with. I'll drop us back to May. Okay, and like I said, I zoomed out and I don't got this photographic memory to where I can even remember what happened. Plus I was looking on the monthly, so it's way different on these lower time frames. So, but anyways, we'll zoom back in. And you know what, I'll just back test here just to show you guys what is up. So you want to take your back testing serious. It's very it's just overlooked on how serious you should take it. People will just be like, oh, you know, they'll just be very like lackluster. They'll just draw up these sort of zones and be like, oh, I would have taken that. Oh, that take profit. Yeah, no, I would have closed that early. I would have been at break even here. No, you got to be, I'll show you. So you got to be real serious. So, all right, I'll try and draw up quick for you guys, so that way I can really show you what I mean by like taking it serious. So I'll draw up my zones. I start at the higher time frames usually. So like I said, I'm starting at the monthly. Some of these zones, like this probably won't get touched from the time period of May to current. I don't believe it's there right now. So I'm not too worried about these higher time frame zones exactly, considering I didn't drop too far back. I dropped back to, what I say, May, because then I'll be able to, I believe, go back to the 5 minute. So here's a big tip. So a lot of times you can do it. There's not really a wrong way to like do your play speed. You know, I sometimes will do them where I've just got it running at the 10x and I'm just watching it run. But when you get to like the point where you have set a trade, so like for example, this isn't based off an actual setup I see, but like say for example, I've got like some trade like this, right? And say I've got to like set, but like that, like I said, this is not a trade setup that I have seen or like I'm doing right now. I'm just showing you for an example. So like if this, see, all right, it would touch. I just kind of figured it would drop a little bit, but I guess I was right. So it's touched. Let me move it. All right. Now what you want to do is you don't want to be doing this, because if you're doing this, it's hard to react to what you would do in real time. Because something like, say you click this play button and then all of a sudden like price, oh geez, I forget it looks like that. price goes like this. It goes up, way up, way up, and then just immediately like sinks through, and it happens all before you're able to even pause it. Then all of a sudden you're telling yourself, oh, well, as soon as it would have broke this, I would have been at break even. Like, you don't know that though. Like, you're telling yourself, oh, I would have been at break even here. Oh, once this went through here, I'd set it just like this and I'd call it good. But unless you actually did that, you don't know if that's what you would have done. So what you have to do is you have to take it in time. So like, you're running like this, and this isn't a trade setup I got, so the fact it's even running this well is kind of surprising to me. So like, for example, like I'd be like, oh, okay. See, like if you were doing this and you're like, oh, okay, now I'm at break even, like you literally set it like this. Or you just like write something down. Say you pull out the text thing and you're like, oh, break even. You know what I'm saying? That way you know. That way if it goes through there, you're not like, oh shit, should I break even now? You're like, oh, okay. In real time, once it breaks this, once it broke above this, I would have been at break even. Like, okay, that's what you're at now. And if something change. That's why when you're in the trade, you want to be going one candlestick at a time. You don't want to be doing a lot of like, just like, oh, okay. Yeah, I would have been at break even here. Oh yeah, I would have done this here. Like, you don't want to do that. That's gonna hurt your trading because you're not trading how you really would. And you're just not gonna be very efficient with what you're doing. So definitely take it candlestick by candlestick once you've set up your entry and you're in it. But like if you're just trying to like run through to say you want to see it run through a zone or something, that's fine to like kind of let it run quick just so you can get to the point that you need to get to. Another thing I haven't said yet is you want to be writing this down. Now it doesn't matter if you've got your setup where like you've got your text and you're writing down like, oh, break even here, 0% gain, or if like you get a winning trade, you're typing in, oh, this was a 3RR win and I've been risking 1% every time. Or if you've got a journal in front of you, which is what I like to do, I have my own journal or notepad where I'll write down my trades as I run. And another thing that's really important is you want to know what your risk is when you set your trade. Like, that seems like that's something that you should do, and you'd be like, that's simple. Obviously, of course I do that. But there are people who don't, and it might be you, and if it isn't you, then good. And if it is you, then all you have to do is, when you set up your trades, like I said, this was the one I just drew up, and then whatever. This isn't based off a real entry. Is like, you have to know, oh, okay, in this trade, before it's even there. So once you set it and it gets touched, or before it even gets touched, and my screen is freezing, which is cool, what you need to do is you need to be like, okay, I'm risking 15%, or not 15, I'm risking 15 pips, but I'm only risking 1% of my account. I have, an $100,000 account, I'm risking 1%, I'm risking $1,000, 1,000 divided by 15 divided by 10. So you calculate that up, because that's the calculation to get your lot size for it. So if I'm correct, that means with that risk, 1,000, you're at like 6.67. I just looked it up on my calculator. Yeah, you're at 6.67 would be your lot size. Now your lot size isn't necessarily as relevant as just keeping in track your RR and what you're risking per trade. So if you want to write it where you've got your text and you're writing like, okay, 1%, you're writing that. You're like, okay, this is how much I'm risking on this trade, 1%. And then if it runs and you write break even, then you get rid of it and you write break even, BE, whatever. But you just want to be keeping tabs of those things, because you don't want to be midway through this trade and then be wondering like, oh, what would my lot size have been? Like, oh, on this one, like, because a lot of times people think they don't do it, but you do it even if you don't realize it. Is like, if you didn't set your lot size before the trade, then as soon as like it's running like this and you're up in the profit, you're like, oh, you know what? On this one, I probably would have risked like half my account, even though obviously you probably shouldn't, and you never would on any other trade, especially if the trade was immediately in the red. You'd be like, oh, you know what? I would have only risked like $100 of my $100,000 account. Like, it would have been real low risk. Like, no, take it serious. Tell yourself what you're risking before you set the trade. You don't want to be all over the place. It's just going to hurt you. All you're doing when you do that is you're just hurting yourself, and you're not getting the true value out of the back testing. So you've got to take it serious. Another big thing is you want to back test, the pairs you are going to do. Don't do, if you're only doing, foreign exchange pairs, don't throw Bitcoin in there if you're not doing Bitcoin. Now, I'm not saying it might move the same or might not. I'm just saying, if you don't actually trade it, why are you back testing it? Because some pairs will move different. And then another thing is you want to trade during your sessions. So if you're real up early in the morning, your New York session, if you're in America, and you're real that's the time you trade, well, you don't want to be trading, at these random time frames all over the day on your back testing. And you might be like, oh, okay, but it's kind of hard to constantly keep up with what time it is and if I'm in the. My best tip, if that's the case, is you have your indicator, and it's super easy to just look up a sessions. Boom, sessions. And it's like all of a sudden you've got all these sessions. Now this one, okay, we've got Asia, London, New York, and then this orange part must be the overlap between London and New York. So if you don't trade Asia, say, I know I don't trade Asia, I personally don't. So I trade London and New York. So if I just kept it like this, then all of a sudden I know if I'm in the blue, I'm not setting a trade. You know what I'm saying? So I know that I would not have a trade during this time frame. Now, I could already be in a trade that lasts into that time frame, and that might be different. But actually setting a trade and looking for an entry at that time frame wouldn't be something I'd do. So this is super easy to do. Just indicators, sessions, get rid of or keep whichever sessions you're in, what time frames. So that way it's super easy, and you don't gotta like constantly be like, oh, okay, what time is it? Oh, okay, we're at 7 o'clock, so this would be New York session. I'll take trades now for the next, just take this. This is super easy, super simple, and you don't even gotta worry about it. Hey, this is me from the future here, and I'm realizing this while I'm editing the footage, that this trade you're about to see is taken during the Asian session, after I explicitly say that I don't trade during Asian, because I don't. But clearly I'm an idiot, and clearly I did not realize somehow during the trading session that this was in the Asian one. So I guess I'm just an idiot. Have a good day. Another thing you have to be careful of is I'm not going to do it, that way we can see how this plays out, but if I, for example, clicked like the 4 hour or went to a super high time frame right now, there's a chance I see how this move plays out before it happens. It's kind of weird, but like because if I go to the 4 hour, it'll show the 4 hour candle, and the 4 hour candle might show like price already being all the way down here where my mark is. So, and if I do that, then it's really throwing me off, and I don't want to be like confusing myself while I'm trading, like, oh, it's already down here, oh, because then you're like, oh, well, did I take the trade or did you? So you just don't want to confuse yourself. It's okay to go back to the higher time frames, of course, because if that's what's in your strategy, then do it. But just do it before you get to your entry point, if that makes sense. Because if you're doing it at your entry point, there's a chance you throw yourself off by already seeing the future by going to a higher time frame. So let's see how this plays out. Don't have a touch. We got a touch. Okay. And we're out. I normally risk 0.5% to 1%, so I'll just take the worst and say that was a 1% risk. So I would say, okay, I'm down 1% with my trading right now, but I keep going. And I just wrote it down, so if you write it down, you don't have to keep the entry up. But if you want to keep, like, if you like looking back at all your previous entries, that way you can kind of dissect yourself and be like, oh, where'd I mess up? Where'd I make something right? Oh, whatever, this and that. It doesn't matter. It's up to you if that's what you want to do. But me personally, I like deleting it. I like to remove the clutter. It allows me to see like new zones and new stuff forming a lot easier. So now that this happens, see, now I'd feel comfortable going back up to this higher time frame, kind of hitting a reset. All right, see how this goes. I'll watch this one on the 15-minute, see if it plays out. Ooh. All right, we got another loss. So now we are at negative 2%. And I'd probably run it all the way to this low. Actually, yeah, we've got this double, a 5. Now I'd be risking 1%, of course, but this might. Ooh, we get there. See? Oh, yeah, it looks like it might run without us. Oh, is that? Hold up. So it got real close to our take profit, so we almost would have got out of the trade. But it actually comes back up again after sweeping all these lows. Finds the power, heads up, sweeps the high, hits the zone that I had marked. And it looks like we're headed, yeah, we're all the way through. If you guys have any questions, have any videos you want me to go over, any pairs you want me to draw up, analyses, whatever, just let me know down in the comments. If you have anything that you think I may have missed that you would like to add in the comments, I'd love to hear it, because I probably did miss a couple things. I kind of made this on the fly because I planned on backtesting today, and I thought, why not make a video of it? I'm going to keep backtesting after this video, but I just wanted to get off a lot of the tips and tricks. And so, yeah, if you guys liked the video, if it helped you out, don't be afraid to drop a like or subscribe. Thank you so much. Peace.